We've got analysts pointing to a specific weekly close that could trigger a rally straight to $1. That's a 250% move from current levels. But here's the crazy part. The on-chain data backing this potential breakout is unlike anything I've seen from a gaming-focused blockchain. We're talking 500% growth in active addresses, over $500 million in total value locked, and transaction volumes that are crushing established layer 1s. Today I'm breaking down exactly why 38 cents could be the most important price level in crypto right now, and why missing this move could haunt you for the rest of this cycle. Sei is trading at $28.65 right now, but don't let that relatively low price fool you into thinking this is some micro-cap gamble. We're looking at a project with a market capitalization of $1.727 billion and a fully diluted valuation pushing $2.9 billion. This isn't speculative territory anymore, this is serious institutional money recognizing serious technology. The project has already secured $35 million in funding rounds, money that's been strategically deployed into infrastructure and ecosystem expansion. While everyone's been obsessing over the next meme coin or waiting for Bitcoin to break all-time highs, Sei has been quietly building the infrastructure for the next gaming revolution. And I'm not talking about some distant future possibility. Analyst Ryuzaki Sei is calling it now. Sei is positioned to become the top gaming blockchain. Gaming blockchain infrastructure isn't just about play-to-earn tokens anymore. We're talking about real game economies, real asset ownership, and real financial utility that gaming companies actually want to use. When Sei processes 1 million active addresses daily, those aren't just DeFi degens, those are actual gamers interacting with blockchain technology in ways that feel seamless and natural. Now this might sound crazy, but multiple analysts are suggesting Sei could flip BNB chain in gaming adoption. BNB chain currently dominates gaming DeFi with massive transaction volumes and ecosystem activity. For any blockchain to challenge that position requires superior technology, better economics, and explosive user growth. Sei is delivering on all three fronts simultaneously. According to Ali Chart's detailed analysis, Sei has been consolidating within a descending channel pattern for most of 2024. Now, descending channels usually get traders bearish, but experienced chart readers know these patterns often precede the most explosive breakouts. The recent price action tells the whole story. Sei tested mid-channel resistance around 33 cents, got rejected and pulled back to consolidate at the 0.618 Fibonacci retracement level near 29 cents. This isn't random price movement, this is textbook accumulation behavior. But 38 cents? That's where the magic happens. This level represents the 0.5 Fibonacci retracement, creating a confluence zone that technical analysts live for. When price breaks above this resistance with conviction, especially on a weekly time frame, the breakout tends to be sustained and powerful. Weekly closes filter out daily market noise and reveal the true underlying trend. A confirmed weekly close above 38 cents doesn't just break resistance. It completely invalidates the bearish channel structure that's been containing Sei's price action for months. Above 38 cents, the technical projections get absolutely wild. We're looking at potential moves to 49 cents, then 65 cents, followed by 85 cents, and ultimately that psychological $1 barrier. Each level represents a significant Fibonacci extension, creating multiple profit-taking zones for technical traders. The volume profile during this consolidation phase has been building beautifully. Lower volumes during the consolidation with periodic spikes during breakout attempts, classic accumulation distribution. While chart patterns get traders excited, on-chain fundamentals are what create sustained rallies, and Sei's numbers are absolutely mind-blowing. Total value locked has reached $574.6 million after consistent growth since late 2023. This isn't flash-in-the-pan DeFi yield farming. This represents real protocols handling real value in the Sei ecosystem. Stablecoin market capitalization has exploded to $208 million, with USDC alone surging to $210 million. Daily trading activity across Sei applications is processing serious volume. Decentralized exchanges are recording 39.67 million in daily volume, while perpetuals trading is generating 11.72 million. These aren't small numbers. This is institutional-grade liquidity flowing through Sei infrastructure. Net inflows of 1.15 million within 24 hours shows fresh capital entering the ecosystem consistently. This isn't existing money rotating between protocols. This is new money discovering Sei's advantages. The transaction growth numbers will absolutely blow your mind. Sei transactions increased 43%, hitting 7.5 million in the last 30 days alone. That's higher transaction volume than many established Layer 1s and Layer 2s that have been around for years. Now, everything I've mentioned so far is impressive, but this next development could be the catalyst that sends Sei into a completely different valuation category. Sei Network just teased integration of traditional financial instruments that could revolutionize how we think about blockchain adoption. We're talking stablecoins, government treasuries, exchange-traded funds, GDP data, traditional stocks, money markets, mutual funds, derivatives, corporate bonds, commodities, private equity, and index funds. This isn't just another DeFi protocol launching another yield farm. This is traditional finance discovering they can settle, clear, and trade on blockchain infrastructure with sub-second finality and dramatically lower costs. The user growth metrics are absolutely staggering. Weekly active addresses have grown 500% in just 6 months. Most blockchain projects would celebrate 50% growth over that time frame. Sei delivered 10 times that level of adoption. 1 million active addresses daily isn't just a vanity metric. It represents 1 million people choosing to interact with Sei infrastructure over alternatives. Ye Finance, Takaralen, DragonSwap, and Kame aren't just launching for the sake of having protocols on Sei. These applications are solving real problems with competitive advantages that keep users engaged. Higher APY opportunities on stablecoins create economic incentives for capital migration. When users can earn superior yields on the same assets just by using Sei infrastructure, the choice becomes obvious. This creates a powerful moat that compounds over time. Rarely do technical setups, fundamental growth, and adoption metrics align this perfectly. The 38-cent weekly close isn't just a random resistance level, it's the confirmation signal that could unlock massive retail and institutional FOMO. Gaming adoption accelerating, traditional finance integration incoming, transaction volumes outperforming established competitors, user growth that defies industry standards, and a technical pattern that screams explosive breakout potential. Cryptocurrency markets remain unpredictable, volatile, and capable of humbling even the most confident analysts. The 38-cent level could easily get rejected, sending Sei back towards support levels and invalidating the bullish thesis entirely. But that's exactly why this setup is so compelling from a risk-reward perspective. Position sizing becomes crucial in scenarios like this. That 38-cent weekly close isn't just another resistance level getting hyped by technical analysts. It represents the breakout confirmation that could validate months of accumulation and position Sei for a sustained rally toward $1. The confluence of gaming adoption, traditional finance integration, explosive user growth, and superior on-chain metrics creates multiple catalysts for appreciation. When technical breakouts align with fundamental growth, the resulting price movements tend to be swift and sustained. Whether Sei reaches that $1 target depends on market conditions, continued ecosystem growth, and successful execution of traditional finance integration plans. But at current levels, with this confluence of positive factors, the risk-reward ratio presents a compelling opportunity for calculated position sizing. The numbers don't lie. 500% user growth, transaction volumes crushing competitors, institutional-grade liquidity, and a technical pattern that could unlock massive appreciation. Now we wait to see if the market recognizes what the smart money has already figured out. Disclaimer: this content is for educational and entertainment purposes only and should not be considered financial advice. Cryptocurrency investments carry significant risk, including the potential for total loss of capital. Past performance does not guarantee future results. Always conduct your own research and consider consulting with qualified financial professionals before making investment decisions. Never invest more than you can afford to lose, and be aware that cryptocurrency markets are highly volatile and speculative.